Hello and welcome to the training webinar. We are going to do Fibonacci's today. Now the reason being, it's one of the main tools that many traders use for planning their trading throughout the day. So a little bit of history, and then we're going to move on to a demonstration on how to use those tools as well. Okay, so what is Fibonacci? Well, Fibonacci was the name given to the mathematician numbering system introduced to Europe from the Hindu Arabic numeral system through a book called Liber Abaci, written by a talented Italian mathematician then named Leonardo Bonacci, later nicknamed Leonardo Fibonacci. Okay, so these levels or these Fibonacci's are not just something that's dedicated to trading. These are something that have been around for many years, and they're used in architecture. They're used in working out all sorts of mathematical problems and equations. Obviously, we're only interested in what they're used for regarding to trading. Okay, so important facts. All you really need to know is that they are a sequence of numbers of which each number is a sum of the previous two numbers. You don't need to know how to work that out. It will drive you nuts, and all charting packages that I know of, free and paid for, have a Fibonacci tool which does the workings out for you. It's simple as drawing the tool on the charts, and we'll show you how to do that on various platforms as well, so that you get an idea of how to do it across the board there as well. Okay, so in trading, we use Fibonacci's to work out retracement levels and extension levels, and the main figures that we look at in Fibonacci retracements are 0.236. You may already also hear this as 23.6%, 38.2%, 50%, 61.8%, and 76.4%. They're the retracement levels. For extensions, we'd be looking for 38%, 38.2% extension, 61.8 extension, 100%, 1.38 extension, and the 1.61 extension, and we'll go into those in a little bit more detail, but they're really just the figures that you need to know about. Okay. Okay, support and resistance levels. These are potential and support and resistance levels that we could expect the price to reach and give us potential entry, exit, and stop loss levels. So it's not just used as a tool to work out where a price may retrace to on a current trend. It's also used as a tool that we can work out the extension of once it reaches that entry price, where it will extend to and where we can take profit. Now, the psychology of Fibonacci is, it's a bit like the chicken and the egg. What came first, the Fibonacci tool or the support and resistance levels? Does the Fibonacci stop at support and resistance levels, or do people start entering the market at the 50% level because it's a Fibonacci retracement, which causes the market to make that retracement happen by the volume of traders entering at that price? Or is it purely the Fibonacci that makes that happen? It's the chicken or the egg scenario. It doesn't really matter. What we need to know is that those levels are consistent with trend reversal prices. Okay, it's a proven fact. It's been going on for many years in the trading scenarios. Traders will enter the market at Fibonacci levels. It's simple as that. Okay, so without further ado, let's have a look at the charts and see where we are and see where we go from there. What do we use Fibonacci's for? Well, we've just discussed Fibonacci retracement levels, the extension levels, stop loss setting, and profit target extension. So we're now going to go and have a look at that now. Okay, so you can see my charts there on the screen. Now, first of all, I'm going to use my charting package, which I use for teaching, because it's very easy for me to do that. But then what I will also do is I will have a look at some charts as well on the MT4 platform, which many of you will be using. Obviously, we don't use not many people use the charts that I use there, but it's basically because it's very good for manipulating for teaching. So we'll go straight into some of these, and we'll put a Fibonacci tool on them and see how they work out. Okay, now reset. I'm going to go use the Euro Japanese Yen, because it's a currency pair that I've recently used the Fibonacci tool on, and it's actually triggered the entry price. So we'll have a look at that first. Okay, so what we've got here is we're on a 4-hour chart. It doesn't really matter what time frame you use. I would recommend sort of 4 hours for the Fibonacci, or the daily. Okay, you might get a clearer picture on the 4-hour. It really depends on how far the trend has moved to which time frame you can do. But you'll see here that it really makes no difference to which time frame you're using. I'll demonstrate that now. Now, we had a bit of a move up on the Euro Japanese Yen to the 140.95 area, and then it started to turn. Okay, that trend has started to head downwards. Now, the fundamentals are also suggesting that this trend will continue downwards. Without going into too much detail on that, just have to accept my word for that at the moment. Now, what happened is we've had this downward trend here start to reverse. Now, as it started to reverse, we've started to think, well, okay, how far is this going to go before it continues down on the original trend? So one of the things we can do is use the Fibonacci tool. So we've got to place the Fibonacci from where that trend started. Okay, you notice that I'm going to use this spike here, not this one or not these ones, because this is really where that downward trend started. At the moment here, this is a consolidation pattern. But to be honest, if you'd started it from here, you wouldn't really be going that far wrong. Okay, but I like to use it from the most recent place where that trend started. Okay, different traders might tell you different things, but that's my personal preference. So I click on the Fibonacci tool, and this is pretty much the same for most platforms. You'll notice that there are loads and loads of different Fibonacci's. In this training, we're just going to stick to the basic Fibonacci retracement. Okay, Fibonacci retracement, this one here. You can see there's the fans, there's Fibonacci fans, Fibonacci spirals, but we're just going to stick to this one at the moment. Okay, so we click on there and we drag that Fibonacci tool down to where the trend started to reverse. Okay. Right, so now you can see that these different levels have appeared. So from this point down here, this is the 100% extension, because that's where we've drawn the line down to. We've then got this seems to have actually gone up the wrong way. Let me just start again. It should start with, it might be because I paused in between the extension and retracement. There we go, that's better. Okay, so the first retracement level is 23%. Now, all these are viable places where a trend will reverse. And in actual fact, if you look at the price action there, you can see that the level stayed the same there. We actually did have a retracement to the 23%, and then it continued down. It didn't make a new low, but then it has retraced further. Now, people will tell you different things. People will say, you know, I like to get in on a 38% retracement. I like to get, me personally, I always go for a 50% or a 61%. Now, the reason I do that is because if I can get in at a higher price, it's a better price, which gives me more profit, and it also gives me a smaller stop loss as well. Okay, so the 50% retracement is always the first one that I go for, unless there's there's a reason for trying the 38%, but generally the 50% is my goal. So once it hits 50%, and there's different ways that you can play this, and this is when it comes down to personal preference and confidence in the market and what it is that you want to achieve. Now, the 50% retracement there, I could just enter that trade on the fact, even though it's got a big green candle coming up to that 50%, I could just enter that trade on the basis that I've reached the 50% retracement. I expect it to find some sort of resistance and to retrace. Okay, or I could wait for it to get to the 50% level and then wait for it to form a candlestick pattern that would suggest that there's a reversal on the cards. Now, whether you look at the reversal pattern on a smaller time frame is entirely up to you. I could take it down to 1 hour and go, okay, well, we came up to the 50% there. It was rejected on this candle. We then got indecision. We've got an engulfing candle. Okay, so, at this point here, I may well think, well, this is it. We've got the retracement. It's time to get into the market. Okay, or going back to my previous example, you could, depending on how confident you are in the market direction, you could just get in as it hits the 50%, even set a pending order at the start of the day. So that is the retracement, the 50%. It depends on how volatile the market is. Again, 61% is also a viable level as well. 76%. Once it starts to get to 76%, and certainly 100%, then what we're actually looking at is the fact that trend is in fact starting to fail. Okay, because once we're starting to retrace back to those levels, we're basically coming back to the start of the trend and coming back to the previous price actions, which would suggest that the downward trend is no longer in play. So once we get through that 60% and the 76%, then we've got to consider that the trend has actually failed. Now, bearing that in mind, that also gives me an opportunity to place my stop loss. Because if I'm starting to think that once it gets through the 61% and the 76% that trend has failed, then really that's when I want to be getting out of the market, even if it is with a loss. Okay, so that also can depict your stop loss. Now again, it's personal preference. If you've entered at 50%, you might want to get out between 61 and 76%. Or you might want to get out just above 76%. Okay, it's all that again is personal preference. Some people will enter at 38% and set a stop loss just above 61. Some people will enter at 50 and set a stop loss just above 76. Some will enter at 61% and set a stop loss just above 100. These are personal preferences. My personal preference is 50% entry with a stop loss between 61 and 76%. I will try and incorporate. What I always try and do is incorporate the immediate area of support and resistance that's between that level. So as you can see here, we've got an area of support. So what I like to do is put my stop loss above the 61% and incorporate any area of support that's local in that area. So I would put my stop loss above this area of support, but not going above the 76%. So my stop loss would come in at about 138.50. Okay, so that's how I've entered my trade and I've placed my stop loss using the Fibonacci retracement. Okay, so let's take that trade off there for a moment. Now let's say that this is where the trade is going as reversed to. This is where we've entered. Now we want to establish where our trade can go to, or where our profit target should be. Now, a lot of the time we'll use previous areas of support and resistance, for instance. Now, we're looking at probably, this is a strong area of support here. We can see that because this is where it's bounced off as well. Okay, we've bounced off of this area of support. So this is probably a likely case of where it will come down to, the 33.27. However, when we're trading, we're always if this trend is continue, we're going to be looking to break that immediate area of support and resistance. But without saying, okay, well, the support and resistance here at 126, where could we expect it to advance to? Well, first of all, let me just say that when it got down to this level, I would probably take partial profit anyway, or close down a percentage of my trade with a bit of profit, just to put something in the bank. But if we want to see this extend, then we're going to use the Fibonacci tool in a different way. And we're going to use it by taking the Fibonacci tool and starting it from the bottom of where our trend started to reverse and taking it up to our entry level. Okay, now by doing this, this will give us our extensions. So you can see here, these are our retracement levels in reverse, but what's happening down below here is we're getting extension levels. Now the primary extension level on a continuation of a trend, once it hits a Fibonacci retracement, is the 161.8 level. Okay, this is always a primary target. So our primary target is actually 300 pips lower than our previous area of support and resistance. Okay, so this is where we could expect to see our trade to extend to. Now, here's an interesting fact. Let's put an arrow on that trend from where we entered the trade at 137 down to that 161 extension. Okay. Now, if I clone that level, okay, let's clone it. If I clone that arrow and then run that arrow from where I started my Fibonacci, excuse me, you'll see that it's almost identical to the length that the trend ran before it started to retrace. Okay, just an interesting fact. It's another way of you working out an extension. You can just look at your downward trend, attach it to your then where it's retraced to, measure that bit, and then measure it again. But this is what Fibonacci tool does for you anyway. So the fact that the information or the mathematics is already done there for you. Okay, so it's a very basic tool. It's used by millions of traders. It's also very accurate as well. You'll be surprised. Just try it on a demo account. Try using it on different scenarios and see how accurate it can play out. Okay, thanks for watching the training, and I hope it's been helpful.